Hey traders, Jason Jenkins, founder, CEO of Jenkins Risk Management. I want to go over real quick in this video how the real-time alerts are structured for those that might be new to the real-time alerts product in the active trader room. So there's a lot on these charts. I just want to go over the basics. It's not meant to be complicated. It's actually kind of a simple process, but I think there is some confusion when you're new to the room and how the signals work. So first of all, whatever trades I'm doing, it could be long-term, intermediate-term swing trades, trading around a core position, and or we put updates when we're in the live room together. For those that are on the full access team, I still update with what we're doing. I could talk a little bit about that at the end if you're interested in that. But just to keep it simple, so you have to understand that there's the right way to trade and a wrong way to trade. But if you think that a real-time alerts product is supposed to be about, hey, buy here at one price in one fixed amount, you plunge all your capital in at one level, and then just arbitrarily pick 2 points and hope that the market gets there and then a fixed stop. I mean, that is one of the most inaccurate ways to trade, and you have absolutely horrible win rates like that. Most people that trade like that, they never really blow up because they have their risk reward and their stops in place, but they hardly ever make any money, and usually it's just a sideways to flat equity curve and they go nowhere, and then the commissions eat them up. Because what happens if you're looking for a real-time alerts product that tells you the exact point or exact price to buy or sell, and then you don't scale into your trade or you don't give yourself 1, 2, 3 entries, you're just asking to get stopped out, or you're just going to miss your price and the market's going to go in your favor. There's a lot of things that can happen. So I don't do that and I don't teach that. So when we enter, or when I'm signaling buy or sell, or if there's something I'm bullish on and I'm signaling that in the room, when I enter, whether it's going long or going short, I'm going to signal that usually in between 1 to 2, no, I'd say between 2 and 5 entries. It's never really one entry. All right, so let me explain a little bit of this. So this is the euro. Now these are a lot of signals here, okay? I used to signal in the room back here. You know, based on what I'm saying in the room, you're going to know if I like the euro, if I want to be short the euro. But up arrows is buy, down arrows is sell, okay? And I got away from just doing the arrows because it doesn't give you any insight into what my size is. All right, so I changed that to be able to show you guys what the size looks like. And then I'll also include the size. Let me find a better example. Okay, so when we're day trading here, and when we're day trading on trades, specifically, I'll say the pair, and then I'll say day trade. And then it'll have, see, pound yen day trade, and you'll see that it's a 5-minute chart, okay? And then you'll see the arrows or the signals. Okay, so here I'll say we're shorting or leaning short pound yen on the 5-minute based on the cycle, blah, blah, blah. If you're not on the full access team, you're not going to get everything that we go through when I'm taking the trade live. You're just not. But you can still follow along if you know, okay, this is a day trade. It's a 5-minute chart. I mean, I don't know what more you want. I'm just giving you that in real time. And sometimes we're going to list it out just like this without a chart. Okay, leaning small short day trade, boom, JPYN. But when I put a chart, I'll put day trade right there. If it's not a day trade, you'll know that's a longer term core position. And most of the time, a core position for me is something I'll have a position in for months and months at a time. But what I'm doing is I'm adding and reducing around my position. So I'm swing trading, which a swing trade could be anything from 2 to 5 days type of a move. And so I'm lightening up my position and I'm getting heavier in my position. And what I try to do to signal that is I'll say, okay, you know, we like being short the euro, as long as we're below 108, let's say, okay? And so you'll know we've been bearish. And now, like for example, in the euro, this last move, we were shorting into this 108 area because we wanted to be longer term core short. So there was lots of little signals for 2 to 5 days where we were short, covering the next day, selling more, covering, cover, 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 reshort, and you're going to see that in the signals. But again, it's not one entry at one price. That type of trading doesn't work. So what I will say is I'll say things like, okay, I want to be a seller of the euro as long as we're below 108. So here, let me zoom out even further. Okay, so here's an example on the euro. Delta is an example of, it's a Greek for, it's used a lot in options, but it's the position size relative to how much the option moves. But delta just is a designation for how you're trying to figure out what your position is, or your net position. So for me, just saying delta 700,000, that just means I'm short 700,000 euro. And so for me, if you join the full access team, you know that a full size max position for me longer term might be anywhere between 2 and 4 million. So when I'm selling 100,000 here, that's very light add, or a very light lot. It's about 5 to 10% of my max position size. And then when we get to levels I like more, at higher levels, I'll sell more, be more aggressive. Sometimes you'll see me like here, I'm selling 500,000 because the market already started to roll over at this point. But what I'm trying to designate for you guys is the position size. That's what I was saying. My core position was 700,000 up here. And then while I'm covering, I'm going to try to move some of this so you can see it. When I was covering in the alert, you can see I was down to 200,000. So I covered 500,000 FX into these lows. That's how you trade. You don't just sell in one lot and then pick a price. Because what if your price is down here and you never get there, but the market was oversold, both in terms of price was oversold and time was at the bottom of the cycle? You never cover. You're never going to get out. You end up taking a break-even trade. It's not the right way to trade, so we don't do that. So I'll say I want to be a seller here, but my stop might not be all the way until 108. So that's why I teach. That's why you got to kind of learn how to work your size, and I do that in the full access team. We teach you about those risk concepts. But I might sell a lot here, and then another lot here. I might enter 3 times before I take a stop loss, which would be maybe above 108.5 or 109, somewhere up here. So that's why you don't see me just taking one price and giving a stop when my stop is way above the market, or there's no reason for me to stop out just because something's moving towards higher prices when I'm looking at things in trend for a stop. So you can see the dashed line here is also where my average cost is at the time. So if it's red, or if I draw my delta as red, that's my position is out of the money. So at this point in time, my position was out of the money, and this dashed red line right here, you can see that's my average cost. And then it went into money, and we covered into the lows and made money. And then sometimes I'll turn around and make this green after the position's in the money, so you can see that. So it's because it's always the same process. This trade was out of the money, this trade was in the money, price was out of the money here, was red, and then when we moved to here, you're going to be able to see this went from red out of the money, and then when price came through, or our average cost, this became in the money down here. So then sometimes, I should go back and I'll change this color to green, because I didn't stop out. You see, I was just out of the money. So I was in negative territory, but there was no reason to stop out. And then when the market rolls in your favor, it gets oversold. that's when we're signaling cover. And then a lot of times you can see these lines. I'll draw these lines to kind of help with the visual of where, if we sell here, cover. If I sell here, I'm covering. If I sell here, these are the lots that I'm covering from that position. So again, I might enter in 500,000, which to you got to kind of figure out what your size is. Maybe that's only 50,000 for you. And maybe you enter, when I go short 100, maybe you go short 10,000. Or maybe you're a bigger trader, maybe you're short 1,000,000. It's all relative to how you want to trade your trading plan. But if you go short 10,000 and then you see me short 500,000 here, well, maybe that means you should be shorting 50,000. Which if each one lot is 10,000, if each one lot is 10,000, that's basically the equivalent of selling 5 lots here. And then look, cover 2 lots, 200,000. Cover another 1 lot. Cover another 1 lot. This is how you scale out of a trade. It's not just all in at one price and then picking just random profit targets and hoping they hit them. We cover when the market is oversold based on a price move, like away from the 8, that's oversold. Just because something can get to a price action and not be oversold, that doesn't mean you should cover. We cover when things get oversold, and we cover when things are low within the cycle, prices low within the cycle. So I don't know where that's going to be when time is up here. So there's no point in having a target. But when it's time to cover, I signal we're buying to cover. And then I try to illustrate that visually the best I can. So this is the delta is going to show you my position size, my overall position size. Up arrows are buying. You see the up arrows here? And there'll be a plus there for buying. Shorting or selling is the opposite, minus 100K with a down arrow, down arrow, down arrow. Okay? And they're green. I do them green when they're in the money. All right? And the red is when I'm out of the money. And if I stop, like right here, I'll signal stop, and then you'll see a buy arrow in red. Okay? And then here's an example. This was red right here. We were out of the money, and then the market, we were short, and then the market rolled over. This was my average cost. Taking profits, re-shorting, taking profits, taking profits, taking profits. All right, guys, you can message me if you have questions on that. I hope that helps. And again, I mean, you're going to get the alerts just like this. Let me clear this up. You're going to get these sell alerts, and even for the day trades, we're going to put them in the room. But if you really want to know what's going on, I mean, day trade, there's just such fast movement. I can't always, I'll say we stopped out, we're flipping and going long. I mean, the only way to really understand exactly what we're doing day trade is you got to join the full access team. But I will put my longer term trades, my day trades in there. And the same thing goes for anything like on Apple or, you know, S&Ps or gold. You know, we're buying here. This is me going long. This is me taking profits. So I was building a core position here way back at 110 at the end of last year. This was my average cost. I was out of the money. This red line was out of the money. And then boom, in the money, taking profits. Okay. I was long almost 1,000 shares. Now I'm out of 334 by the nature of my options that were long. So this is me. Green is down arrows is selling or taking profits out of a long. Okay. That's a nice trade, but that's how I'm designating it. At this point, I was only long 80 shares. 281 shares, 300. So I'm getting less long as the market rallies. All right, guys, hope that helps. Again, I'll be doing more videos on this type of stuff and more analysis in the active trader room. But I hope that helps, guys.